All right. Good morning, fellow traders, and welcome to today's live trading session. As you guys know, today is April 11th, 2022, and it's a brand new week of trading. And what we're going to do is look for some high probability setups in the market. Good morning, Rob. Good morning, Ryan. Good morning, Greg. Good morning, Jamal. Good morning, everyone who is in attendance and those who may not be able to watch this live. We really appreciate you guys taking the time to watch this and see us analyze the markets. But what we're going to do, we're going to go through what we typically go through. But before I move forward, let me do something that I forgot to do. Give me a second. All right, let me right here. Oh no, it's doing it automatically. Oh, okay, yeah. All right. So I guess we can move forward. I just had to make sure everything was being recorded and streamed properly. But all right. So as you guys know, the first thing we typically do every morning is we look for some day trading opportunities based on momentum. So then these first few setups is primarily going to be based on the momentum. And if you've observed price action during the European session, you would know that there were certain currencies that was massively selling off. One in particular, which is the Japanese yen, and we may touch on that in a little bit. But right now, we're looking at the Kiwi yen, NZD, JPY. We're currently looking at the 1 hour chart. Now, let me ask you guys a question. This is an easy, obvious question, especially if you've been with us for a while. What type of environment are we in right now? Based on what we see on this time frame, are we in a bullish environment or a bearish environment? So I'll give you guys a chance to chime in. Okay, so then Joe said bullish, Jamal said bull, and Rob said bullish, and yeah, all of you guys are correct. We are in a bullish environment. Therefore, what do you think should we be doing? Should we be looking to buy or sell right now in this particular environment based on what we see on the 1 hour chart? We should be looking for a buy, right? Yep, buy the Kiwi, exactly like what Adam mentioned. So then, you know, we know that the yen is selling off. We want to buy the Kiwi. So then what we're going to do, we're going to look for an opportunity to get involved in this momentum trade, in this momentum buy on a pullback to support. Because remember what we typically say. We want to buy at support, sell at resistance. That's what we want to do. All of our trading opportunities have to be around an area of value or significance. And what we do, we treat areas of support or resistance or supply and demand as areas of support or resistance. But before we do that, let's first determine if we have something that we call directional confluence. And I know a few of you guys are new, but there's something that we use that we call directional confluence. And you know what you want to do is well, maybe I can go over it right now and share with you exactly what it is. But it's pretty much this: if you see multiple time frames pointing to a bullish bias, then that tells you you're on the right side of the market. All of those time frames show that there's upside, there's momentum, but not all of them have to show that it's moving to the upside. Just maybe 2 out of the 3 that we're going to cover right now. So then right now we see that the 1 hour is bullish. It's pretty obvious. So then let's jump up to the 4 hour. The 4 hour is looking somewhat bullish. I mean, of course, the 20 simple moving average looks like it may want to flatten or turn upwards in a little bit, but we're sort of neutral on the 4 hour. But on the daily, we see that the environment is still somewhat bullish, even though we're topping or consolidating around this area. So then we have to be careful, because what we can assume is that price will encounter an area of supply right around here. We can tell because we have these long wicks to the upside on these candles. Like from this March 28th candle, we have this long wick to the upside, and we have these wicks right here on this April 5th candle and on this April 6th candle, which represents that this is an area of possible supply or resistance, and we have to be watchful once price reaches this particular area. So then if we do go for a buy, we're not going to really shoot for majorly extended targets. We may just close out somewhere within this zone, and just to play it safe. But anyways, what we want to do, we want to look for a buy. We want to buy the dip. We want to wait for price to come to us, pull back, and then from here we want to look for an opportunity to go long or buy. Now what we have to determine is where would we buy. So where will we buy? So of course I mentioned that we want to buy at support, but you guys tell me, based on what you see on this chart, I don't know how well you can see it, but where exactly will you buy at? Like what areas, what levels, what clues, what indicators will you look for in order to know where is a good location, or where is a good position, or good price, or good area to buy at? Because we have to do proper technical analysis. Remember, we don't want to just jump in on an already moving train. This train has already left the station and is already moved for a while now. We want to wait for it to pause and correct and give us an opportunity to jump on. So, what do you see on your end? I'm just going to give you guys a few seconds. If not, if you don't know, then I'll definitely chime in. So then Joe said structure support where the EMA 100 is at the moment. Exactly. Right here in this area. Thank you. Okay. So for some of you guys that may not know, well, yeah, this is the SMA 100. I know Joe said EMA 100, but this is the simple moving average 100 line. And of course, that's the orange line, and this cyan blue line is the 20 simple average moving line. So then, yeah, that's exactly where we would want to, because if you look left, we do have structure. We have structure to the left, and that's exactly what we would look for. I know Rob said hesitation candle near the 100 moving average, and we do see that right here. Now, let me point this out. We see what you would call a hesitation candle right around here. This is what we call hidden structure, HIDDEN, hidden structure. So then this is where there's hidden demand, where there's could be hidden buyers positioned here at this hesitation candle, because what a hesitation candle is when there is a one candle anomaly. We look here, we see that we have all these green bullish candles, these nice strong bullish green candles, but sandwiched in between these strong green bullish candles is this one red indecision candle. It's sort of like a doji candle. But what this tells us is that there's hidden structure right here, and we should look for a potential opportunity to buy. So number one, we have this 100 simple moving average line. Number two, we have structure to the left. And number three, we have this hidden structure. So then this is a decent area that we can look for an opportunity to buy around. And yep, just like Jamal said, we will look for a pullback to this doji candle right here, which is what I mentioned before. So again, what we're going to do, we're going to be patient. We're going to wait for the trade to come to us. Remember, we're not going to chase a trade. We want the trade to come to us. That's really the secret of really trading, not being manipulated by major price moves, but allowing price to come exactly to the areas that you would want price to go to. So in this case, we're just going to identify this zone. Do it right here. This zone right here, where we have this structure and this 100 simple moving average line. And let me change the color a bit. Let me do orange. Just keep it simple orange. Even though it's kind of hard to see this orange 100 simple moving average line, but I think we're fine. But yeah, right around this area is an area where we would love for price to come down to. And you can do other things to see if there's confluence. You can draw your fib, draw Fibonacci retracement. And then what we can see here is that we have the zone between the 38.2 and 50 is right here, which to us is a key zone. This is a key zone of retracement, the area between the 38.2 fib retracement ratio level and the 50% fib retracement level. So then, we typically want to see price go down to that area. So then to make a long story short, what we're going to do, we're just going to wait for price to come to us, touch this area, or come down to this area of support. Because remember, we want to buy at support. And if you look left, we have structure. We can even drag this all the way down. What we can see is that on multiple occasions, price came down to this area or the zone and respected it. Right here, it respected it as resistance. Right here, it respected it as support. Resistance right here, resistance right here, resistance right here. So we see on multiple occasions this area acted as an area of key structure that you have to pay attention to. So then what we want to do is place our trades right around these areas of key structure. So then from there, what we want to do is look for an opportunity to buy, and we'll just look to buy and maybe target this area right here. We won't really shoot for extended targets as far as hold out targets for the long term or long haul, because of this area of supply or resistance up here. So again, let me just mark this as a region where we would want to look for a buy setup at. And what you could do if you want to, you could place a price alert. Remember, that is something that we definitely do recommend, is that you place a price alert. So then in this case, what I'm going to do is place an alert on TradingView. For those who may not know, this is the tool or the resource that we're using to do our analysis on TradingView. So then let me just do that right now. I'm going to do it a little bit above this zone right here and place it right. Say add alert at 85.68. That seems okay. And what I typically do is put the date, which is April 11th. And you can add the year if you want. But then let's say price corrected lower testing 1 hour structure support, and then look to buy on bull confirm. So we'll look to buy on bullish confirmation once price reaches this particular zone right here around 85.70, 85.68. You guys get the idea, but we want the trade to come to us. We're not going to chase the trade. We want the trade to come to us. So yeah, are there any questions about this particular setup? Is it self-explanatory? If so, then we can definitely move forward and definitely look at another opportunity. So yeah, but I think Marvin may want to add something. So I'm going to pass the mic over to Marvin. He's going to talk briefly about what's been happening. I guess why we're seeing this move. Yeah, I just kind of want to just briefly just cover how really this pair, like Kiwi versus Yen, is really a good pair to really look for a buying opportunity. And the reason why is because you're getting the benefit from the commodity link with the New Zealand dollar being tied to soft commodities. And as we know, in an inflationary environment, especially in the type of inflation that we're experiencing now, many of our commodities have been trading to the upside. We've been seeing demand and commodities, and our soft commodities like wheat, like grains, like sugars, as well as our hard commodities. So of course it's benefiting from that. But not only that, but with the Japanese yen has been selling off really for most of the year. Like for the past, like really since 2020, the Japanese yen has been in a sell-off for pretty much for that long or medium term, primarily due to interest rate differentials. And even on last night, during the Asian session, the Bank of Japan, both one of the senior officials and even the Bank of Japan president, Kuroda, actually came forward and they said they're going to keep their monetary policy loose and they're going to continue to keep a negative yield or a negative interest rate on their currency. So, of course, in an environment when most central banks are hawkish, when most central banks are looking to raise rates to help fight off and curb inflation, we see the Bank of Japan choosing to keep their interest rate low and their monetary policy loose to help prop up growth, because of course they're still not sure if they're going to see sustained growth with everything going on geopolitically, with everything going on in Shanghai. So then that's the reason why they're choosing to remain accommodative. But like both. So this pair is going to benefit from the inflation story and also what we see happening with the Japanese yen, with the Bank of Japan intervening to keep their pretty much rates low. But not only that, they're engaging in unlimited bond purchases to keep Japanese government bonds at a certain level. So then, we may touch on that a little bit. I know Melvin wants to move forward and actually cover some more, currency pairs that we could see day trading setups. But when we get to the fundamental analysis part and internet market analysis part of this webinar, we can probably discuss that a little bit more. Yeah. All right. So then, yeah, like what Marvin said, we've been seeing a sell-off in yen for a while, especially very recently. This yen has been selling off massively, even though for a period of about 2 years, we've been seeing overall the yen sell off. But just recently, maybe over the past few weeks, we've been seeing it really tank, and there's been very little opportunities to get involved. You would have to time it correctly. But of course, what we want to do is ride that wave, ride that momentum, because we know that there's divergence in monetary policy, especially when it comes to the U.S. dollar and Japanese yen, which is another setup you could look at as well. Like I wasn't going to talk about that for today, but if you wanted to, you can look for an opportunity to buy U.S. dollar, Japanese yen. Really, most yen pairs are moving to the upside right now, and you can exploit that weakness in Japanese yen to take advantage of some decent high probability setups in the market. So I wasn't going to do this. Let me go to US dollar, Japanese yen, just to see how that's looking. Um, but yeah, I wasn't going to talk about that too much, but we can see here that the market is still pushing to the upside. And I think real soon we'll see a slight correction in this pair. But most of these setups are moving to the upside. And one in particular that I want to look at right now is Gbp Jpy, or pound yen. And actually, that was one that I was looking at earlier this morning. I could have jumped in on that, but I decided to be a little bit cautious on that one. But of course, we see this huge move to the upside, and this is after we had that data come out. As soon as that data came out from earlier this morning, I believe around 2 a.m. Eastern time, 1 a.m. Central time. Yeah, the GDP data. We saw the pound weaken somewhat, but I knew that was going to be short term. I knew that was going to end. The price was going to do what it had to do, and then it was going to bounce and move higher. And there was an opportunity to get in, but I decided to play it safe and not do anything at the moment. But what we can see is that this pair has been moving upwards for a while now. Especially the past few days, you could say ever since March 31st. But I think when we zoom out, you'll get a better idea of how things are actually looking for this particular pair. And let me, like, I know I have some stuff drawn out here. Let me delete some of this right now. And what we could do right here is go through the same analysis. It's pretty obvious. We're looking for a buy opportunity. The environment on the 1 hour time frame is bullish. So then what we want to do is see if multiple time frames confirm that, and most likely it does. But let's go through the process. So then we see the 1 hour is bullish, 4 hour is looking bullish, price is moving to the upside, price is creating higher highs and higher lows, higher high, higher low, higher high, higher low, higher high. Whenever you see higher highs and higher lows, that's a sign that we're in a bullish environment and that the bias is to the upside. So we see that on the 4 hour, and I believe it's pretty apparent we see a bullish environment on the daily chart as well. We see price gave us this nice complex correction, you could say, and then it broke and expanded to the upside quite nicely, quite strongly. So momentum is to the upside. We want to stay on that side of the market for now, based on how we typically trade these setups. Remember, we're typically looking at momentum trading opportunities right now, opportunities where there's a lot of momentum and a lot of market force behind it. So then in this case, what we want to do is buy the dip as well. But this one right here could be a little bit more complicated than the other setups. So then for this one, we don't see any major structure or hidden structure until we get a deep correction. So then whenever we do see this, what I typically do, I look at a few things. For one, I look at something that we like to call an institutional level. So for those who may know, what is that? Or a banking level. What level is that? Could you see on your chart the price level? For those who's able to see, if you have a big enough screen on your chart, what level is that? Where is the next institutional level of support at? What price level is that? Remember, we call it also psychological support. So let me see. Okay, yep, Adam said it, 163.00. So let me just drop a line right there at a 163.00 right here, 163.00, and I'm going to make this white. So then this is what we call a banking level or an institutional level or a psychological level. These levels are key levels because banks like to use these levels in order to facilitate certain financial transactions. So these whole number, round number levels are very key, and you should pay attention to them, especially when you're trading. But what we want to do is look for price to pull back. But I'm going to go a little bit further and see if I can see anything on the 15-minute time frame that can confirm that this area is an area that we need to pay attention to. And we do right around here. What we see is this area of congestion, this area where we see these clusters, where we see these candles moving sideways for a while. This is a key area that we have to identify and isolate because we do believe orders would be positioned right around here as well. So of course we do see that on the 15-minute. Well, if you don't see anything on a 1 hour, trust me, you can likely see it on a 15-minute time frame or lower. Okay, so then we have that cluster area, that congestion, small cluster area on the 15-minute chart. And last but not least, we want to do our Fibonacci. So right here, and we see that that's right around the 38.2. It's actually in the same area as the 38.2. So then what I'm going to do right now, I'm just going to draw out this zone from here all the way to here. And we're just going to wait for price to come to us. We have an area of confluence. We have this institutional or psychological area of support at 163.00. We have that small congestion cluster zone or area on the 15-minute chart, and we have the 38.2 fib, right around here. So then, this is a nice zone or nice area to wait for price to fall back to. And I don't think we have anything left. Looking left, no, I think we're good. The next key level will probably be right around here at 162.63. But yeah, and as a matter of fact, let me just drop a line there. I'm just going to drop a line right around here, and let me change the color. Maybe make this yellow. But yeah, right around here will be the next area that we will look for a buy around. If price bypasses this zone right here, then we'll look for another buy once price reaches this area, and then we can see all this indecision right here. We can actually see it. I don't know if you guys can see it on your end, but this will be the next area that we'll look to buy at. Remember, on trend continuation moves, sometimes the first level that you look for your buy at may not be the level. So then you have to wait until price gets to another level. And we may find the buyers come in right around here as well. But I do believe, based on momentum and the strength of this impulse move to the upside, this zone right around here, this first zone, should be an area where we expect price to go down to and respond to. So for one, we're going to wait for price to come to us, come test this institutional zone of support or demand. And then from there, we will look for an opportunity to buy. And we can shoot for somewhat extended targets. We won't shoot that far as our extension because, I do believe with the yen pairs, they really sold off massively for a while. So then it could be at a period, or it could be in exhaustion where, this move is going to run out shortly, but you never know. As long as the fundamentals say that we should see yen weakness, then we definitely want to stay on that side of the market. But again, we're going to wait for price to come to us. We're going to look for a buy. If price corrects to this zone, we're going to buy the dip. So let me place a price alert here as well, just to be reminded that when price reaches the zone, 163.00, 159. Let's do 15 just to be simple. So at 163.15, going to treat that as an area of 1 hour structured support. So price corrected lower on 1 hour to struck support, and look to buy on bull confirm. All right, so then yeah, we'll look to buy on bullish confirmation. All right, so are there any questions? We're just going to wait for price to come to us. Pound yen, which can be, sort of crazy at times. I know pound yen is known to be the beast,
the graveyard.
Some people call it the beast, some people call it the graveyard, but it's one of those pairs where if you don't get it right, you may get stopped out. But it's a pair that definitely moves a lot. So we, in this case, we want to take advantage of that particular move. And, because it's the graveyard and because it could trick you, and if you don't get it right, you get, your stop loss would get hunted. You really want to pay attention to bullish confirmation once price reaches this area. And I can't get into all the details of it right now. Maybe in a later webinar, we'll maybe go over it. But what we want to do is wait for price to pull back to that zone and then look for confirmation. We don't want to pull the buy trigger as soon as price reaches that zone. Remember, that is so key. We want price to tell us or give us an indicator or give us a hint that, hey, momentum is shifting. We should look for price to push to the upside.
Yeah, and the hope, is that we'll see this momentum shift much soon, because as you can see, this move to the upside in pound yen is pretty parabolic. It's really steep. And even if you look at our stochastic down here, you can see that the stochastic is overbought. It's in overbought territory, which can indicate that it's at a point of exhaustion. But even if you look at the ATR indicator down here, and I'm just want to maximize, you can see that for this rally, we've been seeing volatility pick up, and we've been seeing just this conviction in the pound versus yen and gain traction to the upside. So then that's something to be aware of, just how momentum is shifting and just how volatility is picking up, because that can give us an idea on pretty much how far pullbacks may be. It can give us an idea on where to project our targets. So then that's just something to bear in mind. But I just kind of wanted to touch on that. The pound yen is a pretty interesting pair. I think a lot of this move is benefiting from the weakness in the Japanese yen, because really, to be honest with you, the Bank of England, although they're hawkish and moving towards, hiking rates, they've like pretty much on last week, they sort of scaled back on their hawkish rhetoric. They sort of toned it down, and they're trying to remain cautious in light of what we see happening in Ukraine and with the possibility of slower growth. And with what's happening with oil crude prices, you got to keep in mind that even though the British economy, even though the UK, they don't sort of consider themselves as an oil producing economy, of course, there are moments when there is that correlation to some degree. It's not tight like in other economies like Canada or like or the Norwegian krona or Russia, which are pretty much oil based economies. But there at sometimes, there is that slight, correlation that can come in from time to time. So then, it's just going to be interesting to see what the British pound does over the next few weeks, because they have been scaling back on their hawkish rhetoric. But just like we said before, because the yen is weakened, this is a good opportunity. This is a good pair to still look to buy.
Yeah. And then, also there was a few things that I didn't really cover, why we're assuming price is going to start correcting soon. And I'm going to make this real quick. I'm not going to really do too much, but if you go to the 4-hour chart, and one thing you have to understand about the market is that the market moves harmonically. What was once done before may be done again. Remember, there's harmony and there's symmetry in the market. So then, we drag this line right here, this measured move right here from this low all the way to the high of this consolidation right here. And you drag this, I believe it should go, you drag this right at this low right here, right? So right around here, what we see is prices, it expanded a little bit further, beyond that 1-to-1 measure move. But what we know is that when that happens, pretty soon you should look or anticipate some type of reversal happening shortly. So then that's something that we definitely want to be on the lookout for, is that
Yeah.
type of pullback happening.
Yeah, there has to be some type of unwinding of that impulse move. It's pretty strong, and of course, it doesn't have to, but of course, there it can't be too overbought for too long. They're going to need to actually cool off and scale back, and this trade, this risk trade in favor of the yen, is going to have to cool off at some point. And but yeah, that's what we're hoping. We're hoping to see this impulse move sort of taper or slow down for a little bit. We want to see that retracement, and we can get in on a buy on bullish confirmation.
Yeah. And one thing I know, we talked about impulse moves being impulsive. There's one-to-one measured moves. There's also something that we call measured pullbacks. So then, like, let's just say, even for this one right here, this last correction right here, down here, there's a likelihood that price could go through that same type of correction. And where does that take us? Boom, right to this zone again, right to this area, right to the 163.00. Even though price looks chaotic and there's chaos, there's really symmetry and harmony. You just have to know what to look at. But I'll cover that stuff later. But what we can see is that it's obvious there's a measured pullback that could potentially take place in this area, where we see price come right into this particular zone right here and test this 163 fib, not 163 institutional psychological level. But yeah, so then that's it for the pound yen. We're going to wait for the trade to come to us, and then we'll look for a buy. We have our alert already set up. Are there any questions before we move forward? Also, yeah, one thing I want to re-emphasize is that if price does decide to correct lower, then the next area of support where we think buyers can come in is right down here. So then this is the second area that we could look for a buy around. But we'll be looking for buys somewhere in this area, in this zone right here. All right. Okay, so yeah, I guess we don't have any questions. So what I'm going to do, I'm going to leave it here for now. As I mentioned before, you can look at most yen pairs and find opportunities. All of them are giving you good setups. You have even the Aussie yen. That's pretty much doing the same thing. It should be pulling back as well. And, we have this area of hesitation right here. But yeah, you guys know what to do. Just look at these yen pairs, because right now those are the obvious ones where, where we could see some response, and, we see momentum, and we could see a nice pullback and dip in price. So again, that's pretty much it. I don't really have too much to share with you in regards to this day trading setups. I'm going to pass the mic over to Marvin. He's going to talk about what's been happening fundamentally and all the intermarket analysis and that good stuff. And then from there, we're going to go and do some top-down technical analysis. So then pass the mic over to Marvin. Here he is.
All right. Okay. So I'm going to do my best to sort of describe, what's going on, because there's multiple themes that are actually providing a level of conviction, a level of sentiment in the market. And you guys know that this is Monday morning. Traditionally, Monday mornings, or just Mondays in general, are sort of our low liquidity, low volatility days, where, of course, after the weekend, traders, investors sort of assess where they feel like price would go and currencies would go, but risk assets in general would go. So, of course, on Monday morning, what we do want to pay attention to, we want to pay attention to overall market sentiment. What is the market sentiment? What is moving? What asset classes are moving? Because you can't just look at currencies to sort of get an idea. You got to look at broad base. Where's broad based risk across multiple asset classes, whether it's stocks, futures, commodities, bonds, fixed income. You have to look at pretty much all of that to sort of get an idea in general where risk sentiment is. Is there risk appetite, or is there risk aversion? Is there flight to quality? You want to pay attention to different asset classes. So then what I want to do right now, I kind of just want to just walk through what we see happening even for today. Because if you look at just our various, just for the sake of time, we're going to look at our European indices, our equity indices, like the DAX. This is our German index, and I'm going to go to the daily, and we're just going to pull this up right here. But you can see that it's pretty much lower from where it closed on last Friday. You can see that price is below last Friday's closing price, so we can see that it's in negative territory for today. And and that's something to keep in mind, that the DAX is in negative territory. Let's pull up another European index. I'm just thinking I'm going to pull up the CAC 40, which is our French index. And you guys know, for those of you that have been following the news, you know that France has been in this election period with their presidential election. And I may just touch on that a little bit, but as you can see, it's floating around its opening price. It's not too far above where it closed on last Friday. But since we're on the CAC 40, which is our French stock index, I'm just going to briefly just describe what happened overnight, what happened during the French presidential election. And you guys know that it was pretty much tight. The French presidential election happens every 5 years. So then, of course, it was going to be interesting to see what was going to take place. Um, and I don't want to go into all the details, but right now, like, what we do know overnight is that two of the front leading candidates, which we know, the current President Macron, he's running for his second term as president. But also we have the candidate Marine Le Pen, who is more of the far right candidate, who is more of your anti-establishment, more populist candidate. We saw that she was closely behind President Macron. So then, of course, since President Macron, he did win in the first round. He led in the first round. I think he got about 27% of the votes, and in France, but he didn't get a majority vote. Some of the other candidates were not too far behind, and it was a pretty tight race. So then, that led to some euro weakness, even on Friday and last week, because there was just uncertainty on how that French presidential election was going to turn out. But let me just do this real quick, because I actually looked this up earlier, and as you can see right here, Emmanuel Macron and Marine Le Pen, they're pretty much close together. It's only off by 1 million votes. So then what happens during the first round, like, if it's a small margin that Macron gained in the first round, then 3 weeks later, there's another election. There's their second round of elections, where it's just going to be these two top candidates competing with each other. So that right now, the concern is that everyone that voted for some of the other candidates, like Jean-Luc Mélenchon and some of the other ones that we have here, because this is a lot of votes right here. How many of them are going to vote for Macron, and how many of them are going to vote for Marine Le Pen? Like, those voters here. So then that's pretty much, what markets are going to be following. They're going to be following polls. They're going to be following just sort of, you know the pretty much the progress of this whole campaign election cycle. So then that's going to be in 3 weeks. So then there's a level of uncertainty surrounding that, and it's going to deeply impact the euro, especially if Marine Le Pen gets voted as president. And the reason why is because right now, Macron, he's a president that goes along with more of the euro integration. He wants integration across the eurozone. He's more in tune with Western, the Davos crowd, the Western crowd. Whereas Marine Le Pen, she's more of the populist candidate. She's not for euro integration or deep integration, and more of globalist policy. So then some tend to think that that's going to threaten the euro if she does win. That the euro may weaken and topple if Marine Le Pen wins, since she's anti, I guess, euro integration and euro, just the whole globalization aspect of it. So then this is the reason why traders are paying attention to it, Forex traders, because that's going to definitely impact the euro. But as you can see, for today, for the CAC 40, you can see that it's trading around its opening range, but it's slightly in positive territory. And then let me just pull up another European index. I'm thinking about pulling up um, the UK, the FTSE, right here to see what's going on with the FTSE. And as you can see right here, the FTSE is in negative territory. It's actually below its closing price from Friday. So then, of course, we see that most of them are showing signs of weakness. Most of our European indices are showing either slight weakness, softness, just a sour mood, um, except for the CAC 40, which is interesting. So then right now, we've already sort of deduced that for European equities. Right now, let's move to US futures. So then I'm just going to go through this quick. Okay, well, okay, so right here we see, okay, I did this good. US futures, we can see that it's trading to the downside. US futures, S&P futures, E-mini futures are selling off. Let's go to the Dow E-mini futures right here. And we can see the same thing for Dow E-mini futures. For its daily candlestick, it's selling off. And let's go to the NASDAQ E-mini futures right here. And we could go to the Russell too, but I think all of them are saying the same. And you can see here how the NASDAQ E-mini futures are selling off the most. They've been pretty much selling off due to it being a tech-based, growth-based index, and that it's highly impacted and is very sensitive to high rising yields. Because if you've been following pretty much what has been really the market focus, and this is where I'm going to shift into pretty much what I want to talk about now, because we've already assess that stock markets are selling off. There's a little bit of weakness and there's a sour mood across the board. And a lot of that's due to concerns coming out of Shanghai lockdowns. We have war in Ukraine. And this is all happening in the midst of rising inflation pressures. So then there, of course, there's a concern for a global slowdown. And of course, last week and even some weeks before, we saw signs of possible recession with inverted yield curves. But of course, right now, what we know the market is really focused on, what's happening in bond markets, because bond markets across the globe are selling off as interest rate expectations pick up, but even in line with inflation. Inflation is picking up. So then right now there's this higher expectations of rate hikes from central banks. Primarily, the market is expecting central banks to raise interest rates to sort of curb inflation. But what I want to do right now, I want to go to the U.S. 10-year yield, because that is what's providing some support for, um, the yen is providing some support for the dollar as well. But not, yeah, I would say the U.S. dollar yen is providing weakness to the yen, but it's also lifting the U.S. dollar, the Dixie, at the moment. And as you can see, of course, right here, the U.S. 10-year yield is constantly rising. It's pretty parabolic, but it rose to a high. I think the high was at 2.784, almost 2.8%. And I think the last time it was there, actually there, let's move back, was back on March 4th, 2019. So it's been some years since it's been back at these levels. So then this is letting you know just how far rising interest rate expectations have been, and that right now this is nominal yields. But even when you look at real yields are moving closer and closer to positive territory. So let me just move down right here, and I'm just going to go to right here. I'm going to go to here, U.S. 10-year Treasury yields. We see that is sort of moving up right here, but I want to go here. Um, this is not exactly accurate, but this is an example of 10-year yields minus inflation expectations. So then we can see here that it's moving closer and closer up to this zero line, up into positive territory. If we put this line right here at our zero mark, let's see, well, you guys got the picture. We could, well, let me just do this real quick, just change it, make sure that it's right at zero. But you can see here that the US 10-year real yields are on its way back up into positive territory. So then that's creating some level of, concern, and it's going to create some level of pressure across the market. So then right now, markets are starting to feel, and they still haven't fully processed that we're in a tightening cycle, that central banks are getting ready to go through a rate hike cycle, but they're now starting to respond to that to some degree. Not as much as we would like to see, but of course, the fact that we see real yields picking up, we saw the move in nominal yields, but now real yields are starting to move towards positive territory. That's creating some, pressure on the Nasdaq, more of our tech-based, growth-based assets, because they tend to not do well since they're already overvalued. They tend to not do well in a rising interest rate environment. But this is what's creating some level of caution and concern, that we're seeing this pickup in real yields. And we saw that supporting the U.S. dollar. We see that supporting really the Japanese yen, or really, no, well, I should say the U.S. dollar versus Japanese yen, and and we see the yen weakness across the board. But yeah, so this is what we see. Let me just, for the sake of time, just move forward. Because I know also one thing we have to be concerned about. This is also earnings week, or the first week for first quarter earnings. So then this week we're going to see a lot of risk events, a lot of data jam packed into one week, simply because this is a holiday week. This is Easter week. So then we know that Wall Street will be closed on Friday, and we have that long holiday weekend that we're coming into. But a lot of our economic data that was spread throughout the week, it's going to be crunched into just a few days this week. So then we have inflation data coming out. We have 4 central bank monetary policy statements coming out with the RBNZ. I think that's going to be later on tonight. The Reserve Bank of New Zealand, followed by the Bank of Canada, and yeah, I'm just losing track of some of the other ones, but there's the Bank of Korea, and there's some other central banks that's going to be pretty much, and yeah, the ECB. I can't forget that ECB is going to be releasing their monetary policy statement as well. But this is earnings season. I kind of want to point this out because we do have some major not central banks, but major banks and financial institutions that will be releasing their earnings data. So then markets are going to be following that, because they haven't been doing quite well since the start of the war. We've been seeing these banking stocks sell off, even though we're in an interest rate rising environment where they usually benefit. Like normally, financial institutions benefit, like Goldman Sachs, JP Morgan, they benefit whenever we see rising rates, because like rising rates help boost their profitability as they lend out to borrowers. They get that money back at a higher yield, so then they tend to benefit and make money in a rate hiking environment. But just because of the war, we've been seeing it sell off, and I'm just going to go over this quickly. I'm going to go to the KBWD right here, the bank ETF. And as you can see, this bank ETF, if we go to the daily chart, it's been weakening. Also, it's been sort of selling off, which is really an ETF of our banks. And we see that it's been selling off pretty much ever since really the war in Ukraine. So it's been hurting from that, because there's been a drop in investing banking activity. So then that has put pressure on that. But yeah, let me go to FinViz real quick so we can look at our heat maps, get an idea of what's going on in our futures markets. And as you can see, if you look at this heat map, you can see that our future equity indices are all trading in negative territory. And if we look right here, we can see that our VIX is moving up and higher above its average of 22. This is our VIX futures, but we can see that it's moving above the average. But of course, equities are not only selling off, we're seeing a sell-off in crude oil and energy as well, as more nations, along with the U.S., begin to release their strategic petroleum reserves to help pull back prices and soften energy prices.
One thing I want to say is that these are future prices. This isn't the actual equity. When the market opens, something else could happen, but
no, but it's already open. It's a commodity. So then,
But
it's
yeah, I'm
already
talking
on
about
it.
the equities, stocks.
Oh yeah, yeah, the equities. Yeah, I thought I thought you was talking about, crude oil. But yeah, for these future markets, anything can happen at the open. It can be, much different. It does not have to open in the same manner that we see, these future markets are trading at. But for a good portion of the time, they do stay in agreement and in alignment. There's not too much of a discrepancy between futures and between the equity, that actual hard real asset. So then, but yeah, so we see energy prices selling off. What's interesting is that we're seeing gold pick up steam along with silver. These are our precious metals. Platinum is picking up. What's interesting, we're seeing Dr. Copper sell off, and Dr. Copper is pretty much a good risk barometer because it's sort of connected with industrial production, is connected with manufacturing or growth. So whenever we see Dr. Copper sell off, that can be a harbinger or indicator that we may possibly see slowing growth come in. So we see both Dr. Russell and Dr. Copper selling off. But this is our sentiment for now in the futures market, risk aversion. But let's see what's happening in Forex right quick. So then we can see right here for Forex, three of our leading and strongest currencies for the session is the euro, followed by the Swiss franc, followed by the British pound. So more of our euro-centric currencies are benefiting on this Monday, which is interesting since we know for some time before they used to sort of how can I say, traders used to defend against them since they were close to the crisis in Ukraine, and they're pretty much affected by the sanctions in Russia. Like where they're not getting, oil like they need to or like they used to. So then that's going to hurt their economy and slow down growth.
And inflation will also hurt them a bit more as well.
Yeah.
We're seeing prices go up across the spectrum in the euro, Europe. So.
Yeah. So the three weakest currencies are the CAD, the Aussie, and the Japanese yen. They're selling off. So then that's pretty much, the environment now. It's interesting for this Monday morning, but look for opportunity to sell the yen. That's pretty much what I can say for today. Look to sell the yen against pretty much everything. And you'll be on the safe side of the market unless things change. So then let's go over to crypto markets. And as you can see, we're seeing some weakness in the crypto space, with the weakest being Ethereum, followed by Ripple, and then Bitcoin Cash. And with Ethereum, it's really with these major cryptocurrencies in general, it's interesting to see how they've been moving. And I know we don't have time. If we do have time later on in the session, I'll talk more about it. But whenever you see central banks talk about balance sheet reduction and the withdrawing of liquidity and tighter markets, that's going to put pressure on, Bitcoin and some of our other cryptocurrencies since they pretty much thrive off of that liquidity story. But really, to be honest with you, like with Bitcoin, it's been interesting because we haven't seen it gain traction to the upside as much as we would like to see. And there's some reasons for it. There's been huge buying of Bitcoin, but we haven't seen it translated into market price or into to the price of Bitcoin. And I don't want to get too deep, but a lot of it has to do with the introduction of a lot of our Bitcoin derivatives and futures and leveraged buying of these cryptocurrencies that have sort of kept the cap, kept any type of upside potential limited, as that adds an extra layer of complexity in sort of assessing where cryptocurrencies would go. But they've been pretty suppressed for some time, but we can see that Bitcoin cryptocurrencies are bleeding for the session. So then, yeah, so this Monday morning, US morning, is going to be pretty interesting. But for the most part, we see risk aversion across the board. So look for opportunities to sell the low yielding asset in exchange for the high yielding asset. So yeah, so that's pretty much it for now. I apologize for rushing you guys through that, but right now I'm going to hand the mic back over to Melvin, and he's going to continue discussing some of our top-down analysis and pairs that he's looking at. So yeah.
Yeah, I'm not going to be with you guys for too long. Actually, there's a few that I do have on my radar, but one in particular that's looking quite good, and I'm a little bit more confident on that one because of the nature of the move. So I may just focus on that one. But before we move forward, let's but let me go to the weekly chart first, and let me do Euro Aussie, EURA, Euro Aussie weekly chart. And all right. So all right, so then yeah, right now we're looking at the weekly chart of Euro Aussie. And what we can see here is that the market has been selling off for a while in favor of the Australian dollar. Of course, the euro's been selling off, as we can see. But right now we're at this area of support. So then that's something that we definitely have to pay attention to. We can see that price is really in a fade, like a consolidation phase. But once we drop down to a smaller time frame, we'll get more clarity on what is really going on, especially on the daily time frame. So what I'm going to do is drop down to the daily. We already know that this is a bearish environment on the weekly. So then what we're going to do is drop down to the daily. Let's see what's happening on the daily. All right. So then this is the daily chart right here. And what we could be seeing is the possibility of a reversal in price, a deeper correction to the upside. But with the way things are looking on the daily chart right now, we still have a bias to the downside. Momentum is still to the downside. And, what we could do right now is look for a potential opportunity to, possibly short this particular pair, because as we can see, price is now encountering an area of structure. Right here, you can look left, structure leaves clues. And we can see that price may respond to this area. I would like to see how today's candle closes. That can help me determine what I may need to do. But what I'm going to do is I'm going to go down to a smaller time frame just to see the nature of this pullback, because that can give me a clue on what's really happening with the Euro Aussie. As of now, based on what we see now, the weekly's bearish, the daily's bearish, we'll be looking for a sell, but we don't want to look for a sell yet. We want to, or we don't expect, we don't want to expect price to shoot down yet until we see a few things first. But let's drop down to the 4-hour chart. Okay, so then this is the 4-hour chart right here. And what I see is a few things that I like to see typically. What I like to see is what we call a 3-way pullback, leg 1, leg 2, leg 3, or A, B, C. You typically want to see something like that. This is based on a theory called Elliott wave theory. Of course, I'm not a huge fan of Elliott wave theory. The only thing that I'd use is the 3-wave pullback. Elliott was right when it came to the 3-wave pullback. With everything else, I don't know. But he was correct in reference to the 3-wave pullback. So then right here, we do see this 3-wave pullback. This leg A, leg B, leg C. So then typically after that, we expect for price to rotate or move to the downside. And, what we want to see is either topping or something like this, where we could see price push down, come back up, and then head lower. And if that does happen, then what type of classical chart pattern do we have if that does happen? I'll give you guys a chance to chime in. Okay. Yep. Like what Jamal said, a head and shoulders. Joe said head and shoulders. Stuart said head and shoulders. And yeah, and that's exactly what we will see. We will see something that's called a head and shoulders continuation pattern. So that's something that, we think could possibly take place. But for the most part, before we even look for a sell, we want to see topping. So, when it comes to the Euro Aussie, since, we see the 3-way pullback, since we look at stochastics, stochastics right now is overbought. That's exactly what we want to see. We're going to look for topping, right around this area. So then either a double top or an M pattern or a head and shoulders pattern like what we talked about before. We want to look for that. in this particular area before we consider selling. And we want to see this on the 4-hour chart. That's what we want to see. Now, some of you guys may be asking, if we're going to expect that to happen, is there an opportunity for us to take advantage of this move now? Well, yes. Yes, there is. There is a way for us to take advantage of it. Of course, we have to be extra cautious, but we won't be shooting for expanded targets because, with the 4-hour topping, with the double top and the head and shoulders pattern, if we do see that, then we expect price to fall lower and test the lows down here. So then let me just make that as green right here. This will be our target zone, target area if we do decide to trade this 4-hour consolidation or topping that should take place shortly based on what we believe. However, there is an opportunity for us to exploit a quick move to the downside. But in that case, we would have to be notified of the fact that we do have structure right here, and this structure area could hold as well as structure right here. But yeah, let's go down to the 1-hour chart to see what we see on that, because even on the 1-hour, it could sort of give clear, like a hint that things may be shifting or reversing. So let me just draw in a few things. So then we have this ascending trend line support right here. And, of course, if we, let me see if I was to clone this, what would happen? Okay, for some reason it's not showing up, but let me go to the 30-minute time frame to see. Okay, it's not there either. Yeah, so yeah, for some reason it's not showing up. Let me go to the 4 hours, see if it shows up on there. Okay, yeah, for some reason that line is not showing up. But what we can see here is that if you was to drag this up to this area, you can see that price is trapped within what we would call sort of like a channel, like an ascending channel. And that's something that we should definitely pay attention to. So then what I'm going to do, just for the sake of this, let me just do this. And let me see if I can drag this down right here. But yeah, you guys get the point. So then, it's not perfect, but it does its job okay. So yeah, we see that price is in the middle of this topping, this consolidation, this channel to the upside. And what we want to do before we even look to sell, because I know some of you guys may not want to wait that long. You want to look for an opportunity to get involved in this move earlier. So what I'm going to do is share with you that there is a way we can do it. Of course, you have to look at structure. You have to wait for price to break certain key levels. So let me just draw in one of the key levels. One of the key levels is right around here, right? Because if you look left, we see that this level, that's resistance here, resistance here, resistance here as well. So then in order for us to be confident that momentum is shifting, we need to see price break this level or this zone to the downside before we decide to do anything with a sell. So then this is something you could do if you want to. You can wait for price to push down and break this level to the downside, break this entire zone to the downside, and then from there wait for price to correct and retest this area, what was once support right here. We can see its support right here. I forgot to draw that in. Becomes resistance, and we can enter a sell, and we can sell it all the way down to this zone right here. This could be a setup that we're looking for, that should come or take place soon on on Euro Aussie. Even though our main setup is based on this 4-hour topping, which is what we would love to see, because that can give us a nice trade to the downside with a good reward to risk ratio. So yeah, we'll see what happens. But yeah, that's something that we're expecting on Euro Aussie. So we'll see what happens. But for the most part, after price does this and it tests this low, this area right here, then what we can assume is that price is going to make another attempt higher before it actually makes the real move to the downside. So then I'm just letting you guys know in advance what I believe may take place on this pair. So, we're going to see a quick opportunity to sell down to this zone area. Price is going to react to this area, bounce to the upside, and then from there, around structure, we'll see a nice strong move lower. So, this is our, for those who may not be able to see it, this is our head and shoulders, left shoulder, head, and then this will be the right shoulder of that head and shoulders. And then from there, price is going to shoot lower from there. So yeah, that's what I think is going to happen. So I wanted to give you guys a good analysis, on this particular pair. But yeah, and then from there, what we could potentially see from here is a nice strong move to the upside. But I don't want to go too far and confuse you guys even more. The more you look at these charts, the more you look at price action and price behavior, the more you get a feel for what may actually take place. So then just be aware that that type of move may take place. But yeah, we're looking for a temporary quick short, but we're going to wait for price to pull back after we, take advantage of this short, and then provide another potential sell opportunity. And as a matter of fact, what we will see is something like this. Let me do this. We'll see price break this level, come back to retest this neckline, and then slide lower to hit the target. That's more accurate, actually. But yeah, that's what we're looking for. And then from there, we will look for, price to push up to the upside. But yeah, are there any questions about this particular setup on Euro Aussie, this top-down technical analysis, before we move forward? What time is it? Actually, it's 8:08. Okay. So yeah, I don't think we have any further questions in regards to this. So what I want to do right now, I'm just going to open it up for you guys, see if you guys have any questions on anything. Do you have a question about a particular currency pair, about a particular asset that you're looking at?
Stock.
Yes, stock, commodity, anything you want. We can actually look at it right now and tell you what we think may happen on that particular pair based on our technical analysis and based on what we know could be happening fundamentally. So then we'll give you guys an opportunity to ask. As we know, today is a Monday. So then, of course, a lot of traders don't trade on Mondays. They really get into the action of trading on Tuesdays. And like we've said before, typically Tuesdays through Thursdays are where you can find the best opportunities in the market. So then usually you're going to be more active during those 3 days, Tuesday, Wednesdays, and Thursdays. Usually Mondays and Fridays, you can relax and not be as aggressive with your trading. But yeah, are there any questions about anything? I know some of you guys may like gold. We can take maybe a quick look at gold just to see what's happening. And we'll make this real quick. I'm not going to park my car here for too long, but let's do XAU USD. Let's do Orlando. Okay, so as we talked about before, price is still trapped in this area of consolidation right now. As a matter of fact, we can even take the lows from here and modify the high right here, you could say. But we're still sandwiched in this area of consolidation, and pretty soon price is going to break out. And my bias is that we're going to see a break to the upside. That's what I think is going to happen. We're going to see price break to the upside, and then we're going to see a pullback and price pop higher. That's what I think is going to happen. But you never know with these markets. But we have to allow price to give us a clue on where the market forces are lying. Right now in this consolidation, it's a battle between the bulls and the bears. It's a battle between the buyers and the sellers, the longs and the shorts. And whoever wins will win the battle at the breakout level. So you want to look for that breakout, and then that can give us a clue on what to do.
Yeah. And, even for those of you guys that did watch the recording from Friday, that even with gold, like a lot of this, consolidation, the recent consolidation range bound activity we've been witnessing was primarily due to softness in the greenback, or just kind of like the greenback was in consolidation. Even though we did see signs of it being underpinned, but really what kept gold priced in US dollars within this tight range is really trade surrounding the greenback or trade surrounding the buck. But if you look at gold priced in other currencies like priced in yen, priced in euro, you can see that it's clearly tearing to the upside. And I kind of wanted to point that out. Like, can you pull up the other? Let me just like do this right here. Pull up this. Like, let me delete this right here. And I kind of want to move this over so you guys can see. You can see that this is pretty much trapped within the range, gold versus the US dollar. But if we type in gold versus JPY here, you can see that it was clearly moving to the upside, that we didn't see this consolidation right here. Like, while gold price in US dollars was consolidating within the range, we saw gold denominated in yen move to the upside. So really, gold denominated in yen has been really a good inflation hedge, a good place to park your money in, denominated in yen, gold priced in yen. So then that could be a good currency to trade if you're looking to hold on to gold more as a longer term or medium term investment.
Yeah, a longer term play.
Yeah.
Actually, those who got in a couple of days ago, like last week, right around this sweet spot right here, could have really made some good money because that was a perfect technical setup.
So of course, this right here, what we see happening in gold yen, is giving me confidence, even though a lot of this is also due to the yen weakness, but it's also giving me confidence that we'll see a breakout of this consolidation to the upside as the inflation narrative continues to gain traction, as we continue to see markets move out of fiat currencies into more of a real asset with intrinsic value. We should expect to see gold and our precious metals move higher just on that story alone. So yeah, so then that's pretty much it with gold. Like, I don't know if you want to further do some analysis on an intraday perspective with gold versus USD, but yeah.
Well, yeah, we don't have to. I mean, for some of it is pretty obvious. We see this consolidation, but we also see minor consolidation within that larger daily range or consolidation. And if you drop down to the 4-hour chart, let me go right here to the 4-hour chart. Right here, let's expand this out a little bit. What we can see here is that price was consolidating right here. Like, there's a consolidation within this larger consolidation. And this is actually from earlier. This is from like last week. This really didn't happen. Price maintained this range. So then we really didn't get what we wanted to see. But that's old. Right now we have to go by these newer ranges. And what we can see here is that we have this consolidation. And if you think about it, it almost formed like, well, I don't really want to say it. I don't want to confuse you guys even more. But what we could be seeing is something like this, where we had this nice long move to the upside, and then we had boom, like that, and then we have this right here. So, right here, this is like a variation of the flag. Some people call this a pennant or whatever, however you want to define it. But whenever you see something like this and a break to the upside, then that can lead to a momentum shift to the upside. But if we were to drag this pole and take it at the bottom, what we would see is that price will test the highs or give us a breakout of this consolidation. And then hopefully we would like to see price continue pushing and expanding to the upside. But we'll see. We do see this bullish continuation pattern, but price is still respecting this resistance. You definitely need to see a clear violation or break to the upside of this resistance before we can be confident in our buy for gold, and as far as our sustained move to the upside.
Yeah. And I wanted to point out something on an intermarket perspective, because it's always good to look at other metals to sort of possibly be a leading indicator of what we could see happening with gold. So then typically what happens is that the silver commodity typically leads gold. So we'll see a move in silver first. But before we even see a move in silver, we may see a move in uranium before we see a move in both gold and silver. Uranium, if we see a breakout in uranium, that can also signal a breakout in the yellow metal and even in silver. So then what I want to do, I want to, right here, we can keep gold price in US dollars here. But what I want to do, I want to go to uranium. I think there's UX1 here. Let's do that. Then we're going to go to the line chart. So we can see here how uranium has been rallying. It's been pretty parabolic too. It's been pretty much spiking, moving to the upside. So then, of course, this is a leading indicator of what we could potentially see happening in silver and gold. Silver and gold usually lags uranium. Of course, you know, there's reasons for it. I don't know all of the reasons, but I know it has a lot to do with mining and mining production and stuff. But of course, you can see that there's a strong move in uranium. So then we can expect to possibly see this breakout to the upside in gold, since uranium is typically has a positive correlation, a tight correlation to gold and precious metals as a leading indicator. So then, yeah, so this is giving me confidence that we should see a break to the upside, and we just got to wait for the break, the pullback, and look to load in and buy upon bullish confirmation, and hold this out for the medium term.
Yeah, and we may not get the pullback. So if you want to buy and hold, you know, you can just, you know, place a buy upon the breakout, you know, the daily breakout, and then make sure your stop is behind this consolidation, and then just hold it out to however long it goes. Because you know, what we think is that gold should definitely benefit, especially in this environment. Um, you know, and everything with, you know, I don't want to get into the whole ruble thing tied with gold. I know we talked about that on Friday, as far as the Russian ruble. But yeah, we're expecting price to go up on gold. So yeah, we'll definitely let you know. Let me see. I think we could do this with the Hakanashi. Yeah, this is the Hakanashi candle for that uranium. You know, you can see, you know, more price action, you could say. But yeah, all right. So I guess we don't have any questions, right? So I guess we can end fairly early today. That's pretty much all that we have for you today. I do definitely have a few setups that I'm looking at technically, but I don't think they're going to form until maybe another day or two. So we can definitely wait for that. But yeah, thanks again for coming. We really do appreciate all of you that came on today. And like we typically say on most trading days, remember to always count your blessings, not your pips. And we would definitely talk to you guys soon. So yeah, let us know if you guys have any questions. You can contact us privately. Some of you guys have our private contact information. You guys know how to reach us, or you can put something out on the group chat. But we really do appreciate you guys, and yeah, we're here to help you. And you know, we're expecting there to be some decent opportunities, especially this year with all the changes geopolitically. We should definitely see some major changes in the market that we can potentially exploit. So then let's move forward together. All right. So yeah, thanks again, guys, for coming. Like I said, count your blessings, not your pips. And we will definitely see you guys soon. Stay blessed, stay encouraged, and we'll definitely talk to you guys later. All right. Have a wonderful rest of your day, and we'll talk soon. And also, yeah, I'll let you guys know if we do decide to enter those buys on, remember, the Kiwi yen, and I think we did the pound yen, but we can look at the Aussie yen, all those yen crosses or yen pairs we can look at. But thanks again, guys. We'll definitely talk to you guys later. All right, Ken and bye.